You make great money, yet it still keeps you up at night. You're not alone. 73% of Americans say money is their number one source of stress. And financial stress isn't just in your head. National surveys link money worries to sleep problems, anxiety, and reduced performance at work. I'm Dan Pascone, founder of Tailored Wealth, and in the next few minutes, I'm going to give you a concrete playbook that you can use to reduce financial stress fast. With communication scripts, planning tactics, and systems you can install this week. At the end, grab my 5-minute financial stress test to pinpoint your specific pain points and get a tailored action list. Here's my philosophy in one line. Control is the ultimate asset class. More than the next hot fund or tax trick, what reduces financial stress is designing how cash moves, how decisions get made, and how your family stays aligned. When you own those levers, your nervous system calms down, even if markets don't. Start where stress starts. Uncertainty around the basics. Create an income hub account, a single landing zone for every paycheck, bonus, and vest. On payday, automate 2 sweeps, one to living expenses and one to wealth building before a single discretionary dollar gets spent. Set your base monthly draw as if your bonus didn't exist and treat variable comp as fuel for goals, not basic living expenses. If your income is lumpy, add a volatility buffer subaccount, which is equal to 1 to 3 months of fixed costs, so that lean months feel exactly like normal months. Build your emergency fund next. Aim for 3 to 6 months of essential living expenses in a high-yield savings account that you can access in hours, not weeks. Single-income households, founders, or commission-heavy roles should bias toward the higher end for their emergency fund. Also, name this account in your banking app. Mine's called the Stability Reserve because labeling it helps you to respect the boundary. Now, cut off surprise attacks. List every irregular bill. Insurance premiums, property taxes, tuition deposits, annual memberships. And auto-wire a monthly sinking fund amount so bills never arrive as a crisis. Set calendar reminders 30 days before any renewal. Your future self will thank you. Clean up interest noise. Run a 15-minute debt audit looking at balance, APR, and minimums for each loan and credit card balance, as well as the purpose for each account. Keep total debt to income under 35% to keep mental load low and flexibility high. Keep credit utilization under 30% and even under 10% if you want elite scores and lower rate quotes. Attack anything with a double-digit APR using the avalanche method and refinance only if the new term doesn't extend past your career horizon. De-risk the portfolio decisions that keep you up at night. If a single stock, often your employer, represents over 25% of your overall portfolio, you don't have an investment problem. You have a concentration problem. Create an equity playbook on one page. Set a target allocation and then a trigger that automates selling with the cadence and where proceeds go. Use a 10b5-1 trading plan if you're subject to blackout windows or material non-public information. This will automate selling and reduce emotion and add diversification in every trading cycle. Use tax loss harvesting and identify the taxable impact of each sale so that April never hijacks your cash flow. Install what I call a mission control dashboard so that your brain stops doing math at night, which is terrible for your sleep. Aggregate your net worth, cash runway, vesting schedules, and concentration percentages in one live view or use a financial planning software to do so. And then do scenario analysis with variables like the market goes down 20%, or your income goes down 50% for 9 months, or the Fed raises interest rates by 300 basis points. Stress test your plan once a quarter and decide what you would do under each scenario so that headlines don't create knee-jerk reactions. This replaces ad hoc worry with a standing ritual. I like to block a 60-minute money maintenance session on the calendar every quarter. same day, same time. Use a tight agenda and analyze changes in cash flow, savings, and stock concentration, and then choose one financial decision that you want to make and close the book on. And if you have a partner, end with a 5-minute win review. What's working, not just what's pending, so money stops feeling like a never-ending chore. Now let's fix the most underestimated stress source: financial communication at home. Schedule a 20-minute monthly money huddle with your spouse or your partner, and keep it structured so that it stays calm. Start with a 60-second State of the Union. Total cash, progress on savings, and what's coming up. Review the calendar for big upcoming expenses like travel, tuition payments, or property tax so that nothing surprises anyone. Decide on one priority together. It might be we'll finish the estate docs by the 25th of the month, or we'll raise the 401k contribution percentage by 1% this cycle. Close with appreciation, not accusation, and name one thing that the other partner did to help the plan. And if you have older kids, add a 10-minute family catch-up so they learn the basics without inheriting anxiety. Next, make sure you protect against catastrophes that you can't invest your way out of. Disability insurance if your human capital pays the bills, term life insurance if someone relies on your income, and have an umbrella liability policy over your home and auto to protect against the curveballs you can't imagine yet. Consolidate your policies with an annual review so that your coverage keeps pace with your life without having added unnecessary insurance. Now, very important, give your brain fewer decisions to make. Automate your investment contributions and set annual auto raise bumps so that every raise in pay actually raises your savings rate before lifestyle creep kicks in. And then rebalance at least once a year with bands. If you're outside the bands, act, but if you're inside them, do nothing. And commit to no portfolio changes within 72 hours of a scary headline or news story. This single rule saves more clients than any clever forecast. Use and follow numbers that reduce stress, not impress strangers. First off, 3 to 6 months of essential costs in cash, 20+% savings and investing rate during your peak earning years, less than 35% total debt to income, and less than 30% total utilization rate, and a self-reported money stress score 3 or below in most weeks. And if it inevitably creeps higher, use it as a signal to adjust your systems, not judge yourself. Now, here are 7 tangible moves that you can finish this week. Rename your savings account Stability Reserve or something that works for you, and set an automatic weekly transfer. $200 a week equals $10K per year. Turn on mid-cycle card payments and alerts at 20% utilization so you never drift too high. Create your one-page equity playbook and send it to your CPA to sanity check the tax implications. Consolidate stray accounts that you don't actually use. Fewer logins means fewer leaks and more control. Populate a secure vault with estate documents and insurance policies, as well as an information sheet listing all accounts and contact information in case you're unavailable. Put a 20-minute money huddle on the calendar and stick to the agenda. Repetition is what lowers heart rates, not eloquence. Schedule your quarterly money maintenance right now so that the system, not your mood, runs your finances. Here's a quick story. A client couple of ours in their mid-40s with 2 kids in dual mid-6-figure incomes were fighting about money each month. We didn't start their financial plan with investments. We built a cash flow autopilot, funded a 4-month stability reserve, created an equity playbook for her RSUs with a 10b5-1 trading plan, and scheduled a 20-minute money huddle on the first Sunday of every month. 12 weeks later, same income, same market, radically different stress level because the invisible architecture finally matched the complexity of their lives. If this resonated, take 5 minutes to get your score. Our financial stress test translates what we covered into a simple score and a personalized checklist across systems, liquidity, debt, investment risk, and family communication, plus clear next steps to reduce your stress quickly. The link is below. If your score is low, you'll know what to keep doing. But if it's high, you'll get a plan to fix it starting now. Like, subscribe, and tell me in the comments which move you're likely installing first. Is it the money huddle, the volatility buffer, or maybe the equity playbook? I'm Dan Pascone, dad, coach, and founder of Tailored Wealth. And this is how high earners turn anxiety into clarity. Not with more noise, but with systems that make calm your default. Take the financial stress test now, and let's get you some peace of mind.